In this video, we're going to be discussing the topic of revenue in economics. So, what is revenue? The definition of revenue, the easiest way to define it is the price that you're selling the goods at times the quantity. So P times Q. Okay? Now your average revenue, which is the revenue you make per unit, is the total revenue divided by the number of units you sell. Total revenue divided by quantity. If you do that, you will end up with the price. Okay? So average revenue equals price. Okay? Marginal revenue, what is that? Okay? So again, this word marginal is very, very important to remember what exactly it means. Marginal revenue is the additional revenue that is made from the final unit sold. Okay? So let's say you sold 1,000 units. What was the additional revenue you made when you sold the 1,000th unit? That would be the marginal revenue. Here's a quick diagram down below. So it's a simple demand curve. Okay? Just to illustrate to you what revenue is. So we're selling the product, whatever it is, at £200. And we sell 4,000 units. Okay? So the total revenue would be 200 times 4,000, and then we'd get 800,000. Okay? So 800,000, that is actually the area of this box here. That is equal to the total revenue that's made. Now, what is the average revenue? The average revenue would be the total revenue divided by the quantity. So 800,000, we just worked that out, divided by 4,000, the quantity, and that gives us £200. So again, that's equal to the price as I mentioned earlier. So this here is also the average revenue. Okay, so just a tip, I've mentioned it twice already in this video. Remember that average revenue is the same thing as the price. Okay, it's the revenue, the average revenue is the revenue made per unit. For every unit you sell, what's the revenue you make? It has to be the price. Okay, so please remember that important thing. Any questions, just leave them in the comment section below.